Good afternoon, everybody. Welcome, welcome. Welcome, welcome. Hopefully everyone had a great weekend. Hopefully everyone is able to rest up, get ready for the week ahead of us. Man alive. Index markets had the gas pedal down to the floor. Huge amount of trading opportunities today. But before we jump on in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, hello? You can always tell it's live when it never loads up the way you want it to. Click on the Join the Daily Outlook newsletter. From there, you'll be able to register for our email newsletter list to be notified every time one of those videos comes out. Along with that, we talk about a bunch of stuff in there that we just don't have time to talk about during the day, and that's going to be everything from stocks, options, crypto, you name it. It'll be in that newsletter. So make sure to sign up for that if you haven't done so already. Of course, along with that, the live trade room subscription and trial info is where you can sign up for a free trial to the live trade room. It's a 3-day trial. Get to hang out with us for a couple days, see what it's all about, get your feet a little bit wet, have some fun, ask some questions, and all that fun stuff. So make sure to sign up for that if you haven't done so already. Now, looking at the markets. Today, the markets were a little bit crazy. We had a whole lot of movement today on the indexes. We'll save the best for last. But looking at the euro, we have a nice bull corrective phase up that has gone and tested a full deviation up. Now, the deviation is off of the original 3-push wedge bottom. That was a beautiful little wedge there, faked out the lows and went flying higher. And with that rip to the upside, that led into a full deviation play higher into a level of resistance at 17,704. And from there, we found a little bit of resistance, probably mostly profit taking, but a good amount of resistance coming in at that area, pushing the market back down a little bit. Overall, we have a really nice lift to the upside, and given how strong the buyers are in this, I have to assume that they're going to at least continue for a little bit longer because, well, I have no reason to believe that we're just going to stop in our tracks after having this explosive of a move higher. A couple caveats. We have a lot of sellers that are trapped in. Sellers tried coming in here. That was a trap. Sellers tried, I doubt they came in here because that's a really bad candle, but that did trigger in maybe a trap. Not that great. But then we do also have a trap here, and that was also not very good. So we have a whole lot of trapping going on from the sell side, and the buyers just keep pile driving the market higher. It's looking as though we're probably going to have at some point a corrective phase back down and a higher low type of reversal because, well, when the sellers are this trapped and they realize that they are this wrong, they tend to get out a little bit more aggressively, and they'll probably create a higher low reversal point where the market will then either go sideways or maybe slightly up from that point. Really what I'd like to see is a retest of the range lows. We have range low support at 16,290 that has held up several times. We have a break above it. No pullback retest. So that is the area that I'm looking for as we continue on with the euro. But for the most part, it's relatively calm and quiet now. We've pushed up. We've hit some major objectives up at 17,700s with that full deviation higher. Likely, we're going to be stalling out for a little bit. Now, if the buyers are able to continue and they keep pushing past this 17,700 mark, then we're looking for a potential upswing all the way up to 19,055, and that would be a retest of this giant dive bomb to the downside, that candle there, showing that the sellers are obviously coming in at the highs, but now they haven't really come in afterward. They had the slide down and nothing else. So looking for a retest of that area as a long-term objective that will obviously not be, you know, in the next hour, but probably in the you know, maybe the next week or so. So that's the objective for the euro, looking for continuation to keep it going to the upside as the buyers are probably going to be looking for a higher low type of reversal. Over on gold, gold has been very, very sideways, not much going on here, but we do have a nice bear breakdown lower, and they're trying to keep it going. Major level of support is going to be coming in at 1264.8. Alternatively, we could be looking for a low test down at 1262.4. And the primary idea behind this is we have such a strong move down, a spike in channel down, that we're holding the highs, and this is the first real corrective phase that we've seen on gold. And what I mean by corrective phase is something that lasts more than just a bar or two. Yeah, we had a small little range here, but aside from that, we had a one candle pullback here, a two candle pullback here, you know, a one bar pullback here, two here, two here. We're not really getting any sustained corrections. This is the first one that we've had. We had two here, and that followed up with another 3 or 4 if you count the doji, followed up with another 2. They're not breaking down yet. And that would likely mean that sellers were probably aggressive, selling down, all through here, just selling everything they can get their hands on. And in the first corrective phase, that's usually where they begin averaging into more contracts. So when it comes back down, they can exit everything down at these lows at their final entry point in this case, which would be the lows on the close there. And that would be at 1264.8. So I am looking for the sellers to continue, but not necessarily for a huge move down anymore. I think a lot of the gas is out of the tank. Looking for the sellers to want to push down to 1264.8, probably bounce there for a little bit. If they do want to break down, the next area is at 62.4, and then from there, probably mostly range bound to slightly up as we transition into more sideways price action. Gold looking good otherwise, though. Head on over to crude oil. Now, crude oil, a little bit of a weird one today. Crude oil opened off the weekend with a gap down. Now, we closed on Friday here, we opened up on Sunday here, and that led into kind of a funky gap. A lot of times when you have those weekend gaps on markets that generally don't gap that much, like on crude oil or the euro or any of those, the main objective is for the market to fill that gap so that it's basically unfinished business. They finish the business there, and then they can do whatever they want from that point on, and that's exactly what we had today. They started off with an attempted bear move down that failed, moved up, they filled that gap, and then turned all the way back lower again. So it looks as though the larger channel here, from low to low, put that on the highs. We tried breaking out of it, failed back inside of it on that gap move, came back up, filled the gap, and now we're holding the inside of the channel as resistance. Buyers are obviously still in depth in trying to push the market higher, but we're in an objective that every buyer who's been long, whether it's here, or, I mean, heck, even here, they're going to be taking profit as we move into the channel. So likely area of interest is the channel highs and the gap fill, and now that we've completed that, a lot of the buyers are probably out of the way, and that means that we're probably looking for a pullback. A pullback area to 66.98 or just the whole number 67. It all stacks up with a nice area of confluence through here. We have plenty of swing highs, swing highs, swing highs, looking for a retest of that as support at around 67. The big thing that I'm looking for here is, do they want to stick to these highs, or are they going to come crashing lower? We had this major swing high from back here, and this is the trapping area that either is going to continue down and push down to a brand new low and go collapsing all the way back down to 63, or they're going to try to sell it, fail, and break higher and use it as support. There's really no in-between in this type of area. It's either or at this point in time. So looking for crude oil to really kind of see what it wants to do. Right now, they tried breaking out, holding it as support, but it's not looking that great. And now that we're underneath it again, especially if it starts closing underneath here, if this comes back and starts using this level as resistance, that's a little bit of a problem, because now the sellers are in control and they're pushing it down. They're not letting it rise above that area, and that could easily mean a collapse all the way back down to, you know, like I said, at the very least 67s, but that could have some extended impact on a drive back down to a new low around 63. So obviously that's not going to happen in the next day or two, but it is something that could potentially happen if they fail to break back above 68.50. With some strength, we're probably looking at a downside swing back to the lows again. And some of you might be really happy about that, some maybe not so much, depends on what industry you're coming from. But, you know, in the grand scheme of things, this is kind of a line in the sand, 68.50. If it breaks above it, we're assuming bullish and probably running towards that $70+ mark, in this case all the way up to 73. And if it fails and sellers begin using that as resistance and shoving the market back down again, then we're looking at it as a major level of resistance and a tipping point for the market to come crashing all the way back down towards 63. We have hit a major 618 reversal zone here with a pop up to the highs here, and we are also finding that level of resistance at 69.18. So not only do we have a gap fill at 28, but we also have major resistance at 69.19, 18. There's a lot of profit being taken here. Enough to create a new wedge high, which, by the way, also tested. Lots of stuff up there if you haven't grabbed that. But, you know, I think at the very least we need a pullback. If buyers are going to continue this, I'm going to want to see a pullback towards 67 for a bounce up. But we do have this line in the sand that it needs to get back above on that bounce if they're going to keep it going. So a little bit of a tipping point here on crude. Very interesting to watch over the next couple days here and see what they want to do. And then we have the index markets. The index markets got absolutely smashed today. Started off the gate with a very strong bear move and just pounded by the sellers all day, over and over and over and over again, breaking through the bull 50%, breaking through the bull 61.8%, and testing the bull 78.6%, not to mention the earlier major level of support that started this entire rally to the upside towards 2,800. So we have a lot of defense coming in here at the 2,712 mark, but this is a pretty strong move down. We've blown through the lows of the channel. That hasn't really had much of an impact. The fib levels are basically gone now. We don't have a whole lot to work with there. We can actually get rid of the 50 and 61.8. Those are gone now. So the 786, that's it. So if they start losing grip on the 786 and start breaking below 2,700, that might be the final nail in the coffin before this starts turning back lower towards that 2,660 mark. Now, you know, am I anticipating a huge slide off to continue? Well, I mean, with this much bearish pressure, when you have that strong of a move, you tend to assume that the first pullback against this is going to find continuation. It's very frequent that a lot of sellers may not have been able to catch this whole move down, and now that it's starting to blow off, as soon as it starts bouncing back, everyone starts slamming the sell side and pushing the market back lower again. So the anticipation is, yeah, they'll probably go back down, maybe not all the way to a new low below 2704, but at least make an attempt at it, right? And that's the objective. So on this corrective phase up, looking for the outside channel, right? We broke below the channel, use it as resistance and push the market back down. That's where I'm looking for the market to roll back over and try to drive back down to 2704. Again, it might not break through the low, but if it does, it might be a little bit more of a trapping area. And the only reason I say that is because this does seem a little bit exhausted. A lot of this happened very quickly, and, well, a lot of times when that happens, the sellers on the way down start taking profit, and sorry about that, my dog's going a little bit crazy. Gotta love the male guy, they're protecting me. But we have the sell side moving on the way down, and it looks a little bit exhausted. I'm not necessarily convinced that the sellers are going to be able to keep this going. So I'm looking for the sellers to maybe pause for a little while, and that's why I'm not necessarily assuming that we're going to have a huge new low if it does end up breaking down. Hang on a second. All right. Sorry about that. All right. So that's kind of the idea on the S&P. It's a huge slide off. There's a monstrous amount of bearishness. It's just they might have done it a little too much, too fast, and they need to correct back a little bit. So I'm looking for a correction back up to the bottom of the channel, use that channel as resistance, and then from there look for the market to slide back off again. Now, all of the other markets, the indexes saw the same thing. The Dow broke down through massive levels of support. They've actually broken through the 786 and to a new low, so that is gone. Pretty much every level of support that was there is basically gone. There's a huge amount of bearish pressure on the Dow, especially. The NASDAQ is also picking up speed. You know, the NASDAQ was the strongest for a little while. This thick purple line up here, that's the all-time highs. They're just coming off the all-time highs, and then we see this. Right? Now, the Dow on Friday actually closed up, and that prevented a 40-year streak. There hasn't been a 9-day losing streak on the Dow for 40 years, and they didn't allow it, right? On Friday, they closed bullish, and now today it looks like they're taking their revenge. They finally got it, right? They popped it up. They closed it bullish on Friday, saying, okay, we're not going to go for a 40-year record, but now we're going to sell everything, right? So the Dow is getting absolutely smashed. It is the weakest of the markets, but the NASDAQ is certainly picking up speed. The S&P is probably the strongest out of the bunch for now. That can obviously change. So the S&P is holding on to its ground. It's a little bit more of a dense market. It takes longer for it to respond. The Dow is at a new low, and the NASDAQ has by far the heaviest move to the downside. Cycling off the support at 7,1075. The big round number at 7,000. We'll see if there's a response there, but aside from that, that's really the overview. There's not a whole lot to talk about on the stock side of things. Everything's been kind of quiet. You know, we had some movers today on VLRX, and XBIO was a phenomenal mover, but not a whole lot else. So I'll give everyone a little bit of time here. Type in any markets you want me to take a look at. And if I don't see anything else, then we'll wrap it up for a Monday. What a way to come back to the markets, man, alive. Monday just offering up the opportunities. Jeez, oh Pete. So I'll wait a couple seconds here. See what you all want to take a look at, and then we'll go from there. Now, while we're waiting, I believe I forgot to look at the news, so let's look at the economic calendar for tomorrow. It's not a whole lot. I mean, today didn't have a whole lot on the economic calendar either, but looking at the news for tomorrow, we have the CB consumer confidence for June. That's forecasted at 127.6. That's at 10 o'clock. That's it. No other news, nothing else going on. Relatively calm and quiet there. That's about it. No agricultural news, anything like that. Not really much we have to worry about. All right, well, I'm not seeing any requests for different markets, so that will do it for today. Great day to come back to. Huge amounts of opportunities today. I certainly cannot be upset with the way that today turned out. So that's going to do it for today. Like we always say, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules. You'll be A-okay. If you have any questions, make sure to send me an email, jbrink@slingshotfutures.com. Underneath the video, click on the subscribe and notification bell icon so you're notified every time we go live or launch any videos. We generally launch quite a few videos through the week that you might not want to miss, so make sure to get on that list so you don't miss anything important. Aside from that, enjoy the rest of the day. Hopefully you had a great trading day, and we will see you all tomorrow. Thanks. Have a good one.